This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel, and Surabhi is joining us today. Surabhi, hi. Nigel, hi.
Good morning, Prashant. Good morning, Nigel. And Prashant, wonderful to look at you. You are the burst of color between, all the three of us.
Although I do worry just a little bit whether this is closer to red. I mean,
I think
that was not my intention.
Perfect pink, and I think it's getting us closer towards the weekend. I think it's the color for
Possibly
Thursday.
you could be getting it right today if it's towards red. Let's see how it goes.
Yeah.
Maybe it's the pink of health. Let's be positive.
Positive, right? I mean, always positive. Now, overnight things are looking okay. I mean, they're not looking too bad. But the two big triggers are behind us, right? I mean, at least for now, there is continuity with both. Let me just quickly explain. So you have the Karnataka state elections where the exit polls show that the Congress party has a slight edge. Most exit polls show that. Actually, two specific exit polls give Congress a clear majority. Now, the point is that the counting of votes and the election results is on Saturday. And that's why I'm saying that, well, this is exit poll. The actual results are on the 13th, which is Saturday. The only way this kind of becomes very different as compared to for the market is if the results vary widely and in a very big way from what the exit poll results show, which is if, of course, I mean, the incumbent party, which is the BJP, gets it, goes all the way, which is not likely according to exit polls. Or, on the other hand, the Congress, which is projected to have a slight edge in the elections, actually goes all the way. And it turns out to be a much bigger one. In either cases, I mean, I think the surprise element will be very much there when we come back on Monday morning. In different ways. I mean, in the former, I mean, the market, I think, will get very exuberant on Monday morning. And if it's the latter, I mean, we'll see. I mean, talk about what this means for 2024 elections, etc. will start, what the government will have to do, etc., etc. Already, I'm seeing some brokerages saying that if the exit poll results are true, it means more populism and it means perhaps actually good news for the rural part of the economy. So we'll talk about all of that. But this is the first one. The second is, of course, inflation numbers overnight, which softened, but they softened in line with expectations. I'm talking about the core CPI out of the US. Markets, by the way, they immediately removed all hike expectations from the June FOMC. So that's that was done very quickly. Market reaction also sort of to be noted. The 2-year lost about 10-11 basis points. The 10-year lost about 8 basis points or so. So markets repriced quickly, as they always do. The question, though, I think which many are asking, and we'll sort of put this out later, is whether the market are kind of starting to overestimate this once again. It's happened for the last 1 year consistently. The markets start to price out rate hikes, price in rate cuts, only to pull back later. Many do believe that the CPI numbers out of the US are not dovish. I mean, they have softened, but it was expected. It's not as if the underlying inflation momentum is coming off sharply as the Fed would like it. All right, let's come to the market here in India now. So yesterday was interesting because we got a dip, but it was completely bought. The market ending about 0.25% higher. 18,315 is where the Nifty ended at. The levels are largely similar. On the upside, the Nifty needs to take out 18,450 and 18,720. These are the two levels to watch as we go above and if the market does see an impulse higher. On the way down, the 18,202 number and then the low of last Friday, which is 18,055, are levels which should not be violated ideally in case there is some selling pressure which starts to emerge. The Bank Nifty is, by the way, yesterday it's holding above the 20-day moving average. That becomes the first sort of support on the way down. That number is 42,666. And below that, you've got 42,582. These are very near-term levels as compared to where the spot prices are. On the way up, the two levels to watch on the Bank Nifty are 43,740 and 44,385. So, these are sort of levels to watch out for as we start another trading session. SGX is indicating a 31 odd point higher start. The fact is that the impulse has been to try and buy the dip. We've got this Saturday verdict, the final election results, which will come through, actually the only election results which are to be expected. And as I explained, if the outcome is a little extreme as compared to what the exit polls show, I think Monday will be something to watch out for. We'll get another reaction, however short-lived that is. With that, Surabhi, what are you picking up? Earnings are not looking all that great as well.
Earnings are a mixed bag. Yeah, on inflation, I just want to add one more point, to this, Prashant. That absolutely, as you're saying that for what it's worth, the market was happy with the headline number that came out in the US. It's also the lowest pace of the rise in inflation in the last 2 years. Year-on-year rise of 4.9% is the lowest that we've seen in the last 2 odd years. The market took that with both hands, though, there are those who will argue that core inflation is sticky and whether this number is really as good as the market wants to believe it is. Anyway, we've got a cautiously optimistic sort of a global setup because of that. Speaking of inflation, the inflation print in China, by the way, is also very, very benign. It's actually a surprise fall. The rise in April CPI in China is just 0.1% versus estimates of an increase of 0.4%. So across the board, inflation doesn't seem to be a worry. In fact, crude also sold off a little bit. It's back about 1% this morning, but it sold off a little bit in overnight action. So that's on the global side. But coming to earnings, as Prashant mentioned, it's more of a mixed picture. The big one was L&T. And did you get a rousing sort of thumbs up, table thumping number? The answer is no, because while the order intake continues to be very healthy, it disappointed on the EBITDA front, on the margins. The bottom line as well was shy of expectations. Dr. Reddy's, optically, you'll say the numbers are meeting most estimates. But look at, the fine print. The US business for Dr. Reddy's hasn't done that well. It's been slowing quarter on quarter. So we'll see what the analysts are saying about it. Godrej was, of course, the better of, the all three, if I look at them, because it was a clean beat on most fronts. In fact, the margin was good. The volume growth was 11%. So Godrej probably goes down as a good number. Today, we've got a couple of important ones as well. Asian Paints, for instance, Eicher Motors, Siemens will come through. So we need to see from companies like L&T, from Siemens, that all this huge ordering, is it resulting in good execution at the end of the day, good margins and profits? Dr. Lal Path Labs and Intellect Design from the mid-cap space. A couple of interesting earnings. Just want to round it off with the very strong flow momentum that we have from foreign investors. First, let's put up the provisional numbers, the daily numbers that we've been getting. And mostly it's been a 4-digit number that we've gotten used to looking at. In fact, yesterday's figure was around 1,800 crores of a positive buy, the FPI number. The day before it was about 1,900 crores. Day before it was 2,000. So FPI flows have been very, very solid. That's the provisional figure, the daily figure that we get in from the NSE. Look at the actual numbers that we get from the depositories, and just the monthly tally will come up for you. Very steady rise in terms of participation from foreign funds and foreign investors. The May picture so far, and we're only we're on the 11th of May today, and look at that, almost touching 20,000 crores of inflows coming into the market. Nigel, I guess all this put together, if you just go back to the screen yesterday, right, it was a very sort of muddling along kind of a day, but towards the end, we did manage a close of 18,300. So maybe, the market saying that we really want to stay in control over here.
Well, that's right. Surabhi, so you have that yesterday's positive tick that you saw, and you have this morning's SGX Nifty that's suggesting a bit of a positive tick as well. You put both of them together, and going by what the SGX Nifty is suggesting, I think on the index, taking some money off the table would not hurt. You have the election results over the weekend. You have a couple of big data points. Biden's going to be meeting the congressional team as well to see whether or not that debt ceiling can be raised. So, given the kind of cues we had, you've had a good run. You get a 50 point uptake, take some money off the table. And remember, today's expiry as well. So I think taking some money off the table will not hurt anyone. The institutional data as well, as you mentioned, is rock solid. That's looking very, very good, both in the cash as well as in the F&O market. But from the mid and the small cap index, well, yesterday there were some signs of fatigue. Remember, the last 40 days have belonged to the broader markets. No questions out there. But in yesterday, the sense you got is, the mid and the small cap indices itself, they underperformed both the Nifty and the Nifty Bank. Even the auto index was much higher. So some kind of consolidation is what we are seeing. Though individual stocks will continue to do very, very well. Mind you, I'm talking about on the index level itself. The institutional data, well, the FIs, they bought for 10 straight sessions, so no worries out there. But in terms of institutional flows, as the FI and the DI number, I look at it together. And the net institutional flow yesterday was around 1,000 crores. The 10-day average is around 1,500 crores. So in that sense, it's a little bit lower than what we've seen in the past. We'll have to monitor this trend moving ahead. It was a clear case of short covering yesterday. Both on the Nifty and the Nifty Bank, we did see some open interest unwinding. What did the FIs do? Well, they added some long positioning, though they continue to remain mildly net short. The net short positions are at around 51% odd. On the option side, given that today's expiry, well, important to track. So they bought puts, but they wrote puts as well. So we're not expecting a deep cash, but maybe some sort of consolidation or maybe some mild pullback is what we could see on the index. 18,300, 18,200 put. Between them, they added close to 55 lakh shares on. So there was writing being seen out there. Plugging in the numbers going by the options data, 18,200, 18,250, that's the support zone. But on the upside, that resistance zone comes in at around 18,380 to around 18,420. And I'm going by the call writing that we have seen, and that's how I'm coming to that number. Now, for starters, we'll open closer to around that 18,360 odd. That's why I say taking some money off the table will not hurt. SGX Nifty suggesting a gap up. Let's see how this one goes.
Okay, we're all set for what looks like will be a very interesting session. So let's kick it off with the equity call of the morning. Mahesh Nadurkar of Jefferies says that Karnataka exit polls highlight the election outcome would be close and Congress might turn the tables on the ruling BJP. While this is an incremental negative for the BJP, their analysis shows that voters vote differently in state versus national elections. The consensus base case still remains that of political continuity in May 2024 in the national elections, that is. Jeffrey expects the government to turn more populist, which should be good news for rural consumption, and therefore Jeffries is overweight on staples.
Okay, let's get you some money market views as well. This is on the rupee. Parul Mithil Sinha of Standard Chartered weighs in. She says the USD INR traded in a narrow range as the impact of dollar weakness and lower oil prices was offset by USD buying by PSU banks along with market positioning. For next week, the dollar INR pair will trade in a range of between 81.65 to 82.3 to a dollar. Apart from the dollar and oil, Parul says reserve building efforts by the RBI will likely be the key forex market driver.
On bonds, Parul says that domestic bonds traded range last week amidst volatility in global rates, lower oil prices and tight liquidity conditions. Parul expects the Indian 10-year benchmark yield to trade in a range of 7 to 7.10, with a relief rally seen in global bonds after the US CPI data. Also, the 1 trillion redemption, which is due next week, is supportive of bonds going forward. They will closely watch for India CPI data, RBI liquidity steps, if any, and the dividend announcement from the central bank.
All right, well, that's entire setup, but we have got a lot of stock-specific action to track for you, and we'll get to that in just a wee bit in our top 10 segment. We're looking at Hindalco, Godrej Consumer Products, Gujarat Gas, SRF, Bosch, Ratnamani Metals, as well as Precall and Adani Enterprises. They are stocks that will be reacting to positive news flow, while a couple of those big names from the headline index, L&T and DRL, they could be reacting to the negative results that we saw overnight.
Okay, well, Matt Orton is now joining us. He's Chief Market Strategist at Raymond James Investment Management. Matt, good to have you with us here. Thank you very much. We have one more inflation print, and I'm not sure whether that conclusively leads us in one direction or the other. It's softened as expected, but many are pointing to the fact that the market is jumping ahead as it has done many times in the past by pricing out all rate hikes and pricing in a lot of rate cuts. Would you agree?
Good morning, Prashant. Great to see you again. And I would agree. I think the market is getting ahead of itself. We've had this conversation here for the past year where the market, like you'd mentioned before, gets very, very excited about a positive inflation print, only to realize that inflation, while it's softening, it's not softening enough for the Fed to say that mission has been accomplished. So today's CPI data has been the same thing. It came in as expected. But the fact of the matter is that inflation is still running at 2 times the level that the Fed needs it to be. And as a result, I think it does take a June hike off the table. But I certainly don't expect to see any rate cuts for the rest of 2023. And the market is pricing in probably 3 rate cuts by the end of 23. And unless there's a severe deterioration of economic data, which is not my base case, the Fed does not have scope to do that. And so I continue to tell our clients it makes sense to be more defensive in this market. You can have winning strategies by leaning into companies that are profitable, posting free cash flow, have earning stability, but you're more protected and not in some of those higher duration equities that I think would be most at risk should you have this sort of normalization play out, as I would think it will, as you head into the second half and back part of this year.
Matt, hi, good morning. So what would constitute a defensive stance when it comes to India? Would it be, say, financials here for you? Would it be just consumer stocks? How do you define your defensive stance for this market?
Hey, Survey, good to see you. And I think banks are a more defensive part of the market because we have seen, at least through earnings season, that ROE has continued to expand. You know, the economy is on good footing in India, and so you don't have the same risk that you have in Europe or in the U.S. with respect to the banking sector. And financials and banks in particular have continued to do well in India, and so I think that area makes a lot of sense. And consumers as well, consumer staples and even some parts of consumer discretionary continue to be good. You know, you look at some of the automobile manufacturers leveraged to growing trends in the consumer, whether it's electronic vehicles and that transformation, or factory vehicles like a Mahindra. I think those parts of the market can continue to do well. And I would say that's a little bit more defensive because you have profitable companies there as well. You know, IT services, like we talked about last time, that's the one part of the Indian market that I'm still skeptical on. It's not an area I want to be bottom fishing, and that's not a place that I would say is defensive because it is levered to, I'd say, the most at-risk slowing parts of the global economy.
Hi, Matt. Morning. You've mentioned in the past you like Asia ex-China, but what's the view on China from here on? You know, that was the market that rebounded big time from November, October end till around, April odd. But that seems to, data points we're getting out of there is mixed, and that could have repercussions on the rest of the globe as well. How are you reading that?
Yeah, it's a good point, Nigel. And I think China, it's an area that, even though the reopening is continuing to go as planned, I think the two biggest challenges for China right now is number one, concentration. So a lot of the Chinese equity market is concentrated in mega cap internet communication services companies, and that is a risk for the Chinese market as a whole, because a lot of those names have become very, very expensive, and they are levered to, I'd say, some of the global growth themes that might be starting to slow down a little bit. So if you're going to play China, you want to be more exposed to, I'd say, consistent areas of government spending and expansion. So industrial, cement type companies, consumer staple type companies. I think those are the ones that are going to perform the best. But the other part of China that I think is a little more concerning is, have we plateaued with respect to the amount that consumers are going to spend? I think we still need to see a lot of that play out, and how people's spending habits, travel habits may have evolved even with the zero COVID reopening and reversal. So I'm still waiting to see, and that's why Asia ex-China, I think, makes a lot of sense, because you get the tailwinds of China reopening, but a lot of those countries still have growing middle classes. The countries have less debt, and they have diversified economies without that sort of concentration risk. So I like those areas as well. And areas like Taiwan, South Korea have exposure to the AI upcycle, but also have diversified financial sectors as well that can be on the upswing.
Okay, got that. Matt, good talking to you as always. Thank you for stopping by. Slightly shorter chat today, a little tight on time, but really appreciate it. You have a great day, and we look forward to the next one. Well, with that, we will take a very quick break, and we'll come back with a lot more on the other side. In fact, our entire team is standing by with the CNBC-TV18 list of top stocks to watch out for. So keep it with us. Back in just a moment. Welcome back. You're with us on Bazaar, and it is time to get down to the micros and look at a lot of those important earnings that came in post-market hours yesterday. So our team is standing by with the analysis as always. Let's kick it off. Hi, guys. Good morning. First of all, let's kick it off with a biggie. L&T, Rima, mixed show.
Yes, so Q4 was slightly lower than what the street was anticipating, particularly on the margin front. So revenue growth came in at 10.4%. EBITDA margins declined by 60 basis points versus expectation of flattish margins, and that led to that slight miss on the profitability. The miss on the Q4 margins also resulted in the company missing its FY23 EBITDA margin guidance. So that's the negative. But on the flip side, the order inflows, the order book, and the FY24 guidance is healthy. So the company has seen order inflows of nearly 76,000 crore rupees in Q4. The order book stands at near 4 lakh crore mark. Their FY24 guidance bakes in a sales or a revenue growth of 12 to 15%, an order inflow guidance of 10 to 12%, and plus an EBITDA margin of 40 to 50 basis points. And plus, the company in the call indicated that they have a solid deal pipeline. So miss on margins offset by strong order inflows. There is a leadership change as well. So A.M. Naik is going to be stepping down as a non-executive chairman of the company. He will be conferred the title of Chairman Emeritus. S.N. Subramaniam, who is currently the CEO and MD, will now be the Chairman and Managing Director with effect from 1st of October 2023. So a bit of a leadership overhaul as well. Back to you.
All right, Rima, thanks very much for that. In fact, we will be having Mr. R. Shankar Raman, who is the whole-time Director and Chief Financial Officer of L&T, joining us at 11:30 this morning to discuss the quarter that went by. So stay tuned for that conversation. Well, Hindalco is the other one which should be in focus on the back of Novelis numbers. Well,
that's right, Prashant. The street was bracing for a bit of a recovery from Novelis after last quarter, and there is a recovery. So read the numbers quite positively actually out there. Hindalco will be in focus on the back of Novelis' numbers. Top line, there was a bit of a degrowth, but that's because shipments itself were lower. The management mentioned that in the can segment, there was some destocking that's taking place, and that could continue as well in the near term. That's for the first quarter. But the quarterly EBITDA trend should come up for you on the screen. And that looked good. From around that $340 million, it's bounced back to around $400 million. So that's a positive. And also the EBITDA per ton. Remember in the previous quarter, it had gone to around $376 per ton. And the street didn't like it one bit. But now it's recovered to around $430 per ton, which is the positive. And the management says that in the next 2 quarters, it'll remain in this vicinity of around $400 to around $450 per ton. But in the second half of the fiscal, it moves to that $500 plus per ton, which is good news as well. The net debt as well did come down. But the key reason out there is they had said that it's going to be on the back of release of working capital. And that's precisely what's happened. So that's positive. The next year's guidance in terms of, capex, that's around $1.5 billion odd. Remember in the past year, they had scaled it down from more than $1 billion. It came to around 900 million odd, and they ended even lower than that. So we'll keep an eye out on that. But what they have said is that they'll be funding this via internal accrual. So expecting a green tick on Hindalco.
Okay, so we're going to watch out for Hindalco. Speaking of earnings, Dr. Reddy's came through, and Ekta is joining in. Ekta, this morning, I think a lot of people wondering beyond the optical numbers, whether the internals are really as healthy for Dr. Reddy's. What's your read-through?
Well, that is the key point with regards to Dr. Reddy's. So the numbers were in line, revenue up 16%, margins 25%, profit 959 odd crores. But the numbers were supported by factors such as the revenue from the PLI scheme, divestment of brands to Eris, Revlimid generic contribution in the US, though all of these have been taking place in the past couple of quarters. So what the street didn't like was that the US sales were lower than estimates at around $310 million. Street was anticipating $340 million. India reported a growth of 32%, which was aided by the Eris brand divestment. Adjusted growth was around 5% year on year, and adjusted margins for divestment, as per some brokerages say, such as Antique, was 21% versus estimates of around 23%. So that's really going to weigh on the stock, that what is the future like for Dr. Reddy's after Revlimid generic. There's no divestment of brands going forward, and hence there might be an earnings cliff come FY27. So that's what the street will be looking for, though the reported basis this time round, the numbers were in line. The ADR ended lower by around 3%.
Okay, all right. Thanks a lot for that, Ekta. In fact, we'll be joining with the CEO of the company in just a short while. For now, we'll discuss the numbers and the way ahead. Do stay tuned for that conversation. Let's of course to Manglam. Manglam, how were Godrej Consumers numbers?
Very good numbers coming in from Godrej Consumer this time around. One would say it's in line mainly because of the expectations that the company set up in the fourth quarter update. But absolute basis, you look at the numbers, 11% volume growth is the highest in the industry so far in this quarter. And the revenue is at 3,200 crores, largely in line with expectations. The EBITDA doing a tad better than expectations. That means the margins coming in at 20%. And we see the net profit at around 452 crores as well. The street was working with a number of around 445 odd crores. The EBITDA margins improved by 400 basis points. That was led by a gross margin improvement of 340 basis points, cost cuts of around 70 basis points, and ad spends increased by about 70 basis points as well. Importantly, the India business is firing on all cylinders. We saw mid-teen sort of growth coming in for their home care and personal care business, household insecticides as well as other businesses doing well for them. All geographies doing well. The only thing now we need to watch out for is how the business in Park Avenue scales up, the payback period out there.
Okay, got that. Manglam, thanks very much. So Godrej Consumer seems to be a good show. In fact, we will be connecting with the management of the company as well. In fact, a little later on Bazaar, so around 9:40 thereabouts. Stay tuned for that conversation. Let's now move to a couple of names from beyond the index as well that have come through. So we have Gujarat Gas and SRF. Sonal tracking both the numbers. SRF, of course, the numbers came out earlier, but I guess there was a con call, Sonal?
Oh, yes, that's right. But let me start with Gujarat Gas. It was a beat as far as the poll is concerned, so better than estimates. Revenues were up 6.5%, in line with estimates at 3928 crore rupees. EBITDA, though it declined on a sequential basis, but was better than street estimates, coming in at 560 crore rupees. It was a 200 basis points beat on margins as well. Margins came in at 14.3% versus a poll of 12.3%. Net profits were flat on a quarter-on-quarter basis, but higher than the poll at 370 crore rupees. It was a volume-led beat. Volumes came in at around 9 MMSCMD versus a poll of 8.5 MMSCMD. But despite a beat this time around, the street is split. While Morgan Stanley says that they have an overweight rating and the industrial gas volume surprise, the outlook is good and the quality of volumes is also very good. So they are bullish on the stock. JP Morgan has an underweight rating. They say that while company has been very agile as far as pricing strategy is concerned, competition from propane continues, and that's why they will watch out for the strategy of the company. And PNG industrial volumes are still down 44% from its peak. For SRF, numbers were in line with estimates, but the management commentary is quite bullish. They're expecting 20% growth in specialty chemicals business in FY24, and it is on a high base. However, packaging business margins will continue to remain under pressure, but they are expecting recovery in technical textiles margins going forward. Interestingly, they are also focusing on pharma CDMO, and they are looking at expanding into this field via organic or inorganic ways. They're also looking at refrigerant gas exports to Middle Eastern markets from Q2. That'll be the next big trigger for the company. Expect a green tick on SRF today.
All right. Thanks very much for that. So important numbers coming through. More though, Surabhi standing by with that list, more earnings and a few stocks and news as well. Surabhi, morning.
Thanks so much for that. So first on my radar is Bosch. They've reported a good set of numbers. The revenue is up 23% on a year-on-year basis. The EBITDA is up 19%, came in at 522 odd crores. They've managed to maintain margins at 13% levels, and the PAT is up 14%. Next is Ratnamani Metals and Tubes. It was the best ever quarter for them. The revenue is up 54%. The EBITDA is up 78%. And for Q4 FY23, they've reported margins of 20%. So this is the second consecutive quarter where they've reported the margins above the targeted EBITDA margin band of 14 to 16%. And the PAT has nearly doubled at 75 crores. Next is Precall. Again, a good set of numbers. The revenue is up 26%, the EBITDA is up 21%, and the margins have come in at 11.7% versus 12.3% same time last year. So slight compression over there, and the net profit has come in at 30 crores. But what's important to watch for Precall is management commentary on the Minda Corp acquisition. The con call is at 4 p.m. today, so we'll watch out for any management commentary on that front. And lastly, Adani Enterprises. The company is going to consider a fundraise via equity issue or other securities on May 13th, which is a Saturday.
Got that, Surabhi. Yes, absolutely. I think for Precall, more than numbers, the market's interested in knowing what is happening, who's ultimately going to be running the show at the company with Minda increasing their stake. Anyway, quick recap of our top stocks to watch out for this morning. The ones that have positive news flow around them are Hindalco, Godrej Consumer, Gujarat Gas, SRF, Bosch, Ratnamani Metals, and Precall. Also Adani Enterprises. While stocks with negative news are L&T and Dr. Reddy's, both on earnings. Well, that's a lot of the equity market action. Let's figure out what's happening in the world of commodities. We have Manisha joining in for that. Manisha, good morning. So the inflation print was benign. And what's happening in your part of the world now?
Well, thank you for that, Surbi. The crude oil prices, for one, have continued to be on the stronger side here. The US dollar retreating has been a supportive factor. And then the markets are looking at strong US demand coming back. So the inventories in US for gasoline, distillates and jet fuel all has declined because the demand has been stronger. And then you also saw US cancelling the sale of 140 million barrels from the strategic petroleum reserve. So that extra oil also is not coming into the market. That added premium to the space as well. While, of course, Russia will continue to export more than the planned output cuts is what the numbers show, and that is what is keeping the crude oil prices in check. The overnight space wasn't so great for the metals also. The LME index fell by nearly 2% overnight. Copper is nursing losses as well, fell nearly a percentage point yesterday. The bigger decline, though, came in for nickel. That fell by 3%. Zinc was down nearly 2% in the overnight markets. So whatever gains that we saw on Monday and Tuesday, overnight really has wiped all of that off.
Okay, all right. Manisha, thank you very much for that. We'll take a quick break here. Up next, we have the management of Dr. Reddy's joining us to talk about their fourth quarter earnings. That's going to be the big stock to watch today. We'll connect also a little later with Deepan Mehta of Elixir Equities for his take on these numbers. So many. And you don't want to miss that conversation coming right up in just a bit.
Welcome back. Well, the SGX Nifty has been telling us that we should get a pop of around 35. Now it's actually 40 points on the screen, so not looking bad. That's a perfect 18,400 on the SGX Nifty in Singapore. But let's stick to some of the earnings that are in focus. In fact, let's get our first corporate conversation of the morning going. Pharma major Dr. Reddy's posted a set of numbers which was largely in line with the estimates for the fourth quarter. However, the street is worried about the base business performance and, of course, what's happening with the company's U.S. sales, which were slightly below street estimates, you can argue. Eriz Israeli, Chief Executive Officer at Dr. Reddy's Labs, is now with us to discuss the performance in the fourth quarter and, of course, the outlook ahead. Thank you very much for joining in, Eriz. I want to start first, with getting a sense of a lot of the one-offs. The quarter was really supported by, let's say, sales of generic Revlimid. You also sold off some of your brands, which kind of, added to that one-off. Give us some more detail on all of these factors that led to a good pop, at least on the top line.
Yes, so this year is indeed a good quarter for us in which we continue to enjoy the tailwind of new products, especially in the United States. In this year, we had a couple of impairment of assets, and as well as we did not receive actually incentives this quarter. So let's say it's a very normal quarter for us, like we had in previous quarters and likely to have in the quarters ahead.
All right, sir, we take that point on board. But how did the base business perform for the company this quarter, ex of all these one-offs?
It went well. We are actually in the growth momentum in all the markets. And especially in the areas that we had even challenges in the past. So this quarters we grew also in the API business as well as in all the markets. So in general, in FY23, all the markets performed well. And that's also relevant for this quarter.
Right. So the U.S. markets did around $310 million of sales. How much did Revlimid generic contribute as compared to the previous quarter?
So we are not giving specific numbers of the product. And what I can say that the product will continue to be meaningful for us and may fluctuate from quarter to quarter, but it's going to continue to be big contributors to our performance in North America. And at the same time, we are ready for a launch of something between 25 to 30 products in the United States, plus the additions of the acquisition that we recently doing in the United States. So United States will continue to be a very focused area for us.
We get that point, Erez. But if you could give us some sense of the business aside of Revlimid, which is, of course, a big drug for you because the market is trying to understand X of Revlimid, how your US business is doing, and whether there's actually some pricing pressure perhaps building in.
We do see in the United States similar models to what we did in the past. Specifically for the quarter, we had less of those competitions, so we do, in terms of impact, better performance of the base as related to price erosion, as related to market share gain. And in terms of product launches, I think the most significant piece, beside the normal launches that we are recently announced, is the fact that we started to sell by our distribution network the main products, and which over time we will launch more and more of those. Those that were already there by main, of course, we immediately are selling, but we are launch also products from that acquisition as well as our own internal products that we submitted and we launch through the year.
All right, what are you guiding for, though, in terms of US sales in the coming quarters? What I'm looking for is a quarterly run rate.
As you know, we cannot give guidance. This is a policy. But what I can say that I believe that the US will continue to be strong, as well as the other markets. And in general, the company is now in a very positive momentum for the last couple of quarters, and likely that we will continue to see this momentum also in the quarters ahead.
So margins have been aided by the US business divestment of brands to Eris. There will be PLI government grants as well. Adjusted margins were around 21% as compared to estimates of 23%, adjusted for all of these, in a way, one-offs. Any pressure you are seeing going forward, and what's the guidance looking like now?
We will continue to maintain that our long-term, as well as we already there, of the 25% EBITDA as well as 25% ROCE will continue. We finished the fiscal of FY23 very strongly with the EBITDA of 30% and ROCE of 35%. So in that respect, we will have years and quarters in which we will be above it or below it. The above or below is a reflection of timing of the new product as well as level of investment, as we do want to take the money that we are accumulating and the profit that we have and invest into the future, being a very organic growth company.
Okay, and finally, the India business, after we adjust sort of the one-offs or the add-ons, it was up about 10% year on year. Do you see this kind of growth sustaining into the current year, FY24 as well?
I believe that India will continue to grow in double digit also in FY24 and also in the years after. I believe that India will grow even faster than it was in FY23. And in addition to that, we are investing a lot in building portfolio for India, both Horizon 1 as well as Horizon 2, both organic as well as inorganic with licensing in deals.
I appreciate you joining in and giving us all of those details. Wishing you all the best for the coming fiscal. Well, time to slip into a short break, though. On the other side, well, we'll get chatting with Deepan Mehta, Director at Elixir Equities. He'll be joining in to help us out with some fundamental analysis. You stay with us.
Okay, welcome back. Deepan Mehta is ready with us, and we'll bring him in just a bit. But Anuj is here in the studios as well to run us through what he's making of the trade setup. Anuj, hi, morning.
Morning, Prashant, Surbhi and Nigel. Well, my sense is today you could have a IT-led rally because the US inflation data has raised hopes of a Fed pivot. Even if there's no pivot, at least a pause is something which the market will expect now, and that would mean an end to the valuation reset in IT stocks, something you saw even in the NASDAQ as well. And even otherwise, ex of Infosys, most of the IT stocks actually have been decent. Bank Nifty has had a big rally. My sense is maybe that sees a bit of a consolidation. On the Nifty, the level I'm watching out for is 18,420 because if it moves past that, then you can expect even bigger rally. And broader market could do well today. On the Nifty, the issue really is about the call writers. You had big call writing at 18,350. 18,300 call writers yesterday did some unwinding. But the big question is, will the 18,350 call writer cover today? That's the data on your screen. A lot of open interest at these two strikes. So obviously there's some resistance at 18,380 to 18,420. But the texture has been buy on dips. Even yesterday, the texture got respected. And as I said, keep an eye on the large cap IT stocks for momentum because that's where perhaps things could do well today. On the Bank Nifty, yesterday defended that 42,800 sacrosanct line in sand, and that was good news for the bulls. But my sense is it might just underperform the Nifty in the first half today. It has big resistance as well placed right above it, 43,500 to 43,700. So maybe better to focus on Nifty today rather than the Bank Nifty.
Okay, all right, Anuj, and that fitness regime is really showing, huh? The French beer, you gave up on that, but the fitness regime is definitely showing. I think those kilometers...
The jacket has become a bit loose, yeah. I mean,
you're giving the others a bit of a issue. Somebody wrote to me saying that you should follow Anuj Singh. I'll put on weight.
The discipline is astounding. I mean, the regime, the discipline, just sticking to the knitting time and again, including, I think, a Friday. I know you stuck to it even on a Friday.
Absolutely. Look, I mean, there's no easy way out. You have to go to the gym, spend 1.5 hours there, and in between, keep a control on your diet, no alcohol, no, I mean, whatever, whatever you like, basically, you have to avoid that.
You have to give up on that. Nigel, what thoughts? Are you inspired enough to act?
I think Nigel is the one who inspired me.
Actually,
because Nigel actually was the one who really got fit. So
yeah.
And he manages to enjoy the good things.
But can't avoid a couple of those that Anuj mentioned. But kudos, Anuj. Besides the market calls, I think that's another thing that we need to pick up on. Getting a goal in place and working towards that. Having a good day. Well, as promised, let's get chatting about stocks. Deepan Mehta joins us. Deepan, we have a couple of earnings reactions that we're going to look forward to. And the play on the India growth story is L&T normally. But those numbers looked a little bit disappointing. Even the guidance was a little bit subdued. What do you make of those numbers?
Yeah, Nigel, good morning and thank you for having me on your show. Yes, a slightly disappointing set of numbers, especially on the margin side, because I would have thought with operating leverages coming into play and softer commodity input prices, as also the fact that the management has been selective in going and bidding for projects, and they'd like to go for projects where the margins are slightly higher. So that's where the massive disappointment is. I think it's fine as far as new order inflow is concerned, but I think we should be asking the management a lot more questions about why the squeeze in margin. Is it transient? And how is that picture looking in FY24? But look, L&T is a multi-year growth story, and infrastructure spending, overall capex cycle still remains very strong as we enter into peak election season as well, which should see even more spending to complete infra projects. So on the whole, I think it may be a miss for one quarter, but the long-term story is intact.
Okay, Deepan, hi, morning. And absolutely, your points have been well noted. We will indeed take all those questions to the management when we chat with them at around 11:30. For the timing, let's quickly get in some perspective on the trading setup and some trading ideas as well for the day. Mitesh Thakkar and Sudarshan Sukhani are with us now. Good morning, gentlemen, and thank you for joining in as always. So I guess the critical question is that the SGX is also looking quite healthy. You may get a 20-30 point pop, but then do you sell into it? Or do you ride along? That's, I think, the basic question. So let me start with you, Sudarshan, your take.
Yeah, good morning. See, when the trend is up, usually the idea is to buy on dips, not sell into it. So I am still a buyer on dips. Every time we see the market go up, there is an intraday dip, and that is always an opportunity to go long in an ongoing up move. So the trade for today is the same. Look for intraday dips, and they usually come. If a dip doesn't come, a consolidation comes. Keep a stop under 18,100. the eventual target hopefully should be 18,500 plus. So stay only on the long side of the market. The bank nifty could go into a consolidation, so the focus should be on the nifty today.
Okay, Mitesh, morning gentlemen. Mitesh, what about you? How are things looking?
Yeah, morning Prashant. I think the overall setup remains on the positive side. And I think I'm looking at a test of 18,350. Once that is clear, then I think, maybe we'll look at further rallies. So immediately, I think with the gap of about 40-50 points, may not take a trade. But if we see stability above 18,350, then I think we'll want to take a long. Otherwise, it's a market which might, see some supply around 18,350 and then consolidate for the next 1-2 sessions. So the trend is up, but I think tactically, I think you just need to see if the pivot of 18,350 is being taken.
Okay, all right. Hi, morning, Mitesh. What about individual stocks? What are you looking at?
Morning, Nigel. I have 3 buy calls today. One is LTTS, buy here with a stop below 3,800 for targets of 3,920. Metropolis is a buy with a stop at 1,340 for targets of 1,390. And Gas Authority is the final buy call. Keep a stop at 107, look for targets of 114. One sell call on Aarti Industries. Keep a stop at 521, look for targets of 480.
Wow, that one collapsed yesterday after, already very poor performance over the last many months. Aarti was down 9%. Sudarshan, what about you? What are your calls?
Well, Atul is a buying opportunity. It had a knee-jerk decline a few days ago and is now recovering from that decline. So buy with a stop under 67.70. India Cement is just completing a fairly bullish pattern. It's a positional trade because you want to stay on patterns that are giving a larger, say, gain or suggesting a larger gain. India Cement is a buy with a stop under 190. Granules is my only intraday short with a stop above 308. Finally, Berger Paints, that evergreen stock. Every time it dips, you can go and buy. It's a buy with a stop under 612.
Mitesh, Varun Beverages, any thoughts? I mean, that was a big gainer from yesterday.
Yeah, I think the stock was buzzing a lot, but I've not been tracking it, unfortunately, so I don't have a view there.
Okay, it's a new high, 1 lakh crore plus market cap, and some 13 times since listing in 2016. So absolute stunner of a performer. Gentlemen, thanks very much. We'll speak again soon. Well, F&O trading ideas also now. Manoj Muralidharan is with us, Vice President Derivatives at Religare Broking. Manoj, good to have you with us here. Good morning. How are things placed according to you? And on the index and stocks, what are your trades?
Good morning, Prashant. Prashant, we realize that this May series is a good one because the FIs are also lesser in terms of short position that they had last month. But now we need to understand what type of money comes in. We were seeing good amount of money coming to the derivative part, but at least in the last 4 to 5 sessions, there has been good cash buying from the FI part, and the quantum is good enough. So we are focusing more on delivery-based buying stocks. And if we see a follow-up in the derivative, that becomes a buy. So I believe Infosys is one where there is huge buying, which is happening in the last couple of days from that 1248 to 1260 level. So that becomes a buy. The stop loss should be 1230. The stock has a potential of almost 1350 to 1320 as a target on that. And in yesterday's trade, in Nifty 50 specifically, there are a lot of stocks. But then we believe HDFC Life in the finance sector has seen good delivery-based buying, close to 160% higher than what we regularly see. So we believe this stock has more potential on the upside, at least a 584 as a target. The stock is at 560. We recommend buying that. The stop loss should be somewhere close to 545. And again, it has been the put writing in Nifty strikes of 18,300, and previous week, if you remember, it was 18,200. So we believe put writing is one which helps the Nifty find a support, and the intraday low or the support for today might be an 18,272, 18,300. The upside is open. So we believe that there is a possibility today the bank Nifty might outperform because of certain reason. We look into a ratio analysis, there is a possibility bank Nifty might do that, and if it does that, then the upside remains open. So buying an 18,300 call option for today's expiry seems to be a very prudent strategy, and we need to wait till the end. The target can be close to 120 at that.
All right, Manoj, what about your picks?
Yeah, as I mentioned, Infosys at 1260 would be the first buy. We have a target of 1320, and HDFC Life at 560 with a target of 585. The stop loss should be 540 on the stock.
Okay, all right. Thanks a lot for that, Manoj. For the time being, though, we'll slip into a short break. When you come back, we'll have the pre-opening rates with us. We'll also be joined by Mr. Aditya Sirogi of Birla Corporation to talk about their numbers and the way ahead. You stay with us.